Good afternoon, traders. This is Christian Farmer, Target Trader Group, and this is your end of day market recap for Tuesday, January 20th. Well, a little bit of a different day on our hands today. A lot more red on the screen today. Felt like there was some heavy selling that really kind of picked up around like 12 o'clock today, where things kind of bounced pretty nicely. Some areas of the market bounced pretty nicely, and then it's just the selling kind of just took over for the day, and the sellers kind of didn't look back after that. Risk disclaimer in front of you: everything that we're going through is for information purposes only, not giving any advice or recommendations, and everything that we're going through is for information purposes only. So I'll kind of give you my take on the day. We'll go over some stocks, but I always kind of start with what I said in my last video, which was on my last public video, which was on Friday. By the way, if you want more in-depth analysis, I go over this much more in detail for members over the weekend. We go over open positions, we go over every single sector there is, and really kind of I insert what I think is going on, what looks good. And then that basically goes into how I construct the weekend watch list as well. So to leave off where we did on Friday was I just thought that the markets had gotten to a point where we were overbought, and that probably happened enough on Wednesday, and then we started to see, as we got into Thursday's price action and Friday's price action, where what we had seen so far to start the year, where setups really worked, then all of a sudden like setups weren't working as well. And that's usually a sign that that there may be some type of a turn coming. Now, I don't like to really kind of predict things too much, but what I did was, I came into, like, going back to the middle of last week, like I had on about 15 different swing trades, which is a lot for me. Just because we were seeing a lot of good setups, and setups were working quite well, and we profited pretty well off of those setups. But I really started, I took off about 3 trades on Thursday. Then I took off another 4 or 5 trades on Friday too. Now, I don't normally go like 100% into cash, because we do know that the market goes up over time, but we know that the market's going to dip and correct and do those types of things. But essentially, I think those were enough signs that we may have a turn coming from what we saw on Friday. And again, going back to that overbought condition, as I went over in Friday's video, I went over like probably about 5 different groups that just looked maxed out to the upside. Looking at the aerospace and defense group, looking at the semis group, looking at the industrials group, looking at what biotech had. Well, maybe not biotech at this point, but regardless, I went through about 5 or 6 different sectors that said, hey, these things have basically just gone straight up. So that's not normal, and it's a reminder too. And like, as you're kind of looking at the price action today, it's a reminder that this is something that you pick up on, obviously, over time as you're a trader, is that markets don't go up in a straight line, and they don't go down in a straight line either. Um, One of the things that I find that I've been kind of, I'll call it, moaning about over the last couple months, that I don't like, is we've been getting this, so when I worked at Merrill Lynch, one of the most widely read reports, and then of course when I moved over to Bank of America, was the Bank of America Merrill Lynch Fund Manager Survey. Salespeople used to tell me that was probably one of the most widely reports that salespeople send out. So this is the second month, I'm just going to bring in, that we've seen that there's this going on, right? And again, it's not so much about, I don't want to say it's not about sentiment, but it's just about the fact of positioning, right? We know at this point that the average cash balance is at, going back all the way to 1999, it's at an all-time low, which means that folks are already invested, which is a cause for concern. So this is probably the like top of my list in terms of concerns, is not so much like sentiment. I guess, which kind of builds into this a little bit. It's just tough to measure sentiment, but it's the fact of just the positioning. And this concern, if we rewind a little bit, this concerned me with what the price action that we were seeing back in November. Remember, going back to November, it was a horrible month. the 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 only thing that saved November was the week between Thanksgiving and that final week of November, which had a huge rally, and it did it where there isn't a lot of market participants participating, except for retail. So that week saved November. Then we get to December, and we had a couple decent weeks. The Santa Claus rally was front run for the second year in a row, right? And that's logical because everybody was talking about when everybody talks about something, it usually gets front run, or it doesn't happen to the same extent that it usually happens because everybody's talking about it, right? Usually there's phenomenons and seasonality that occur, and a lot of times it's when folks aren't really talking about it, and then those cycles can kind of repeat. But you walk into the first part of January, and all of a sudden we got the playbook from the first trading day of the month, and that was semis outperformed, software underperformed. Right? It was almost the exact. I don't have the numbers in front of me, but it was the just about the. I actually should have the numbers in front of me, but it was basically what we saw was the opposite in terms of what we saw semis and what we saw. Again, what did I do with this note? Let's see. Yeah, so the first of the month, we saw the SMH ETF go up. Sorry, the second trade, January 2nd, the first trading day of the month. We saw SMH go up 3.7%. We saw software go down 2.9%. We saw aerospace and defense go up 3.4%. We saw the junior Qs go up 1.8%. We saw EWY, which has a lot of exposure to memory chips, was up 5.1%. This is just the first trading day of the year. So that set the tone. And, if you thought that you were going to, so let me bring up some charts for you. So that kind of gave us some signals, right? That kind of led us to, basically the middle of last week, right? So for example, the semi ETF, right where we started this year, right? Off and running, right? And it continued, right? So again, and then you look at IGV. So all of this, in my opinion, like we were given these signals on the first trading day of the year, right? And here's what's going on with right here, right? Now this bounced back a little bit and then it failed, right? And now it's probably a little bit into capitulation at this point with the move down and the volume that the software ETF is seeing. So let's go back to the semi ETF for a second. So I mentioned to about the middle of last week, right? What was the signal? What kind of changed things a little bit last week, in my opinion? Well, the fact that we just got overbought, right? Which is in here. We gapped up. You don't normally see this after a big move where we gap up. This was on Taiwan semi earnings, and we didn't close anywhere near the highs of the day, and then we gapped up, not gapped up, but we also started very positive for semis on Friday, and once again we didn't close anywhere near the highs of the day. So here's where we are. Does this mean it's death to the market? No, not necessarily, but it's tough to say, geez, I want to go out and start buying all the semis because they're still up. Sorry, just bear with me. This ETF is still up 9% for the year, right? That's talking about a couple weeks. That's a huge move, right? That could sometimes if a group is up 9% for the year, you said, okay, that group did pretty well. Well, this is just for a couple weeks. So I think that's why patience is necessary. And the other thing that I mentioned on Friday was besides the markets being overbought, I made a tough time period, which is the heart of earnings season, where all these companies that have advanced like this are going to have to now justify the price action, right? And I think some of them will, but you also are going to have situations where what you're seeing right now, right, in something like Netflix, which is still going down. Now, this is unfortunate because, number one, the company has changed a bit, right? Whenever there's a big acquisition, right? The company now changes, right? This was a company that was doing things on their own, was one of the most creative companies in the media space. And so I get the positives of like why they would be wanting to acquire Warner Brothers, right? It gives them a whole bunch of different products and services. But before they were doing all that homegrown, right? They didn't need to go and acquire somebody. So now you've got this huge acquisition that they're going to be doing, and now they're suspending buybacks, and it's going to be changing the company. So I just remember this happening. I've got a little bit of experience with this, in the early 2000s when there was a lot of M&A, and I remember companies acquiring other companies, and all of a sudden the company changes. So I'm not saying that Netflix can't recover from here on earnings. I didn't think that their actual numbers were that bad, but the deal now overshadows everything. Right? It overshadows the fundamentals, and yeah, companies begin to change. Like they change their personality once they're doing a big acquisition, right? So unfortunately, that's the situation for Netflix. But we could go through. So I went through the semiconductors. I think aerospace and defense, which also, here's your first crack here below the 5-day moving average, right? And this is another group. Again, just up too much. I think up too much meaning good if you took advantage of these crazy moves. But here's the raw numbers just to put things in perspective, right? It's even, I think, after today, where this went down 3%, the whole group is up 18% year to date, right? So again, I mentioned, I think, in one of my videos last week, I still like this group, but I don't like it up here. It's just advanced too much, right? So maybe down into the 20-day moving average. If maybe it needs to put in a bull flag. I think it's ultimately looks really good, but just not up here. And that's the situation that we have on our hands. Let me go over the SPY chart too, because I haven't really talked too much about that, and I'll give you an important level to watch for the day. So number one, you're going to hear a lot about SPY breaking the 50-day moving average. Is that the end of the world that SPY broke the 50-day moving average? Well, I mean, it's not good. We're now down for the month, by the way, in SPY. Just one day, completely negates all the all the movement in SPY. And as if you've been following my videos, you know that this is not where the alpha has been in the market. Right? We did start above the value area here, but there's been a lot of cross currents that have been going on within SPY. Hence, the large cap growth names have been unwound and have been underperformers. Meanwhile, the small caps, which are not in SPY, have been doing extremely well. And also, yeah, so this breaks the 50-day moving average. What I would be watching next is this level, like right in front of you. This is 677. Apologize if you can't see that. Here, I'll put this so that you could see this, just the screen. But this level right here, this is the bottom of the value area. I was explaining this, and whenever I put this on Twitter, it always becomes a little bit of a headache. But I mentioned how the 80% rule was complete today. And the 80% rule, if you're not familiar with it, is when price starts either above or below and you break into the value area, there's an 80% chance that price is going to go all the way through. When price is above and price falls inside the value area, then it's the bearish 80% rule, meaning price is going to go from one side of the value area to the other. Now, again, this is not 100%. Some people, I know this is really dumb to say this, but I'm going to say it. Right? The 80% rule is not 100% rule. It's not 100% rule. Right? There's a 20% chance that it doesn't happen. I know I have to say that because there will people be on social media will say, "Oh my God, well the 80% rule didn't work," and I have to remind them that it's not a 100% rule. There's a 20% chance that it doesn't work. But for now, this is now complete. And by the way, the bullish 80% rule is when you start below and you break in and you go all the way to the one side. So right now, the 80% rule is done. And that's our level of support is 677. Again, where am I coming up with that level? Where's the MarketWebs coming up with that level? It's based on all the activity from December. All right, so that's where we're getting that information from. All right, the Qs have broken below, and we know that the Qs have been showing relative weakness all month long. Now, we do have a level to watch here. We took out a downside VPOC. This is the point of control from the previous period. So we're coming back and we're checking into where there was a huge amount of volume last month on average. All right, so that we'll see if that holds. It doesn't look very strong so far. A lot of times also with the valuary studies, keep in mind that things can kind of overshoot a little bit and then they kind of come back, you know, especially like after a day like today where it just looked like from 12 o'clock on, there was just heavy selling going on no matter what. Somebody, you know, may have just wanted to get out of equities today. Small caps, still, again, break of the 5-day moving average, right? So all this momentum and trend so far for the beginning of the year, that's a bit of a break there. Notice what happened today, and I put this in my midday note today, but I said, hey, watch this level too. We rallied off the open right into this resistance level. This is the value area for the week. Right, the value area for the month is all the way down here. This is the value area for the week, and we got rejected there on that first attempt to reclaim. So that's the story there. Let me go over a little bit of commodities. GLD, which is a trade. I've been long gold for a while, and I took some profits in this. This is another gap up. You could kind of look at some of the other gap ups, and usually we kind of come back in here. So I didn't take off my whole position, but I took off a good chunk of it today. Right, gold up 3.8%. Look at how far we are away from the 5-day moving average. So again, if you're looking, if you have FOMO in gold and silver today because you see how much they're up, you could basically say, okay, maybe watch for a check back. Right. This was kind of interesting too. I was looking at this last week because we really didn't get a signal, and I'm sitting long gold. You could see I put a trend line in here. A trend line in here, and we almost broke this towards the end of last week, but we held it pretty well. You could have said, hey, this could be a head and shoulders, and watch for a break of the neckline. Right? A lot of times things can look like a head and shoulders, but they aren't head and shoulders. Hence the movement here. And gold finished close to the high of the day. Silver, you know, this is also kind of tough too, in my opinion. Right? Because silver looked a little bit tired to me last week. Now you may look at the chart and now laugh at me saying something like that, but you know, we basically here we go for silver. Notice how separated we were from the 5-day moving average. We checked back, right? And then we're back up here making new highs again. So did not close near the highs, but you know, people are talking about how silver's going to 100. I don't doubt that, right? We know that some things like round numbers, and that definitely could be where silver's headed. But you know, and if you think that that's true, then you should be buying dips in silver, as we did see a dip after Wednesday's price action. Crude. I'm getting all these. I see a lot of people who are getting very bullish crude. I'm sorry, but I'm not seeing it yet. It's still below its 200-day moving average. It took out some overhead supply last week, which are these VPOCs, and it got rejected. You know, a mini rejection. We're still holding above the 50-day moving average, but I would be mindful of that. Right? I would also be mindful of this 59.74 level on crude. Right? Nat gas got a lot of attention. Now I get it. I'm sorry to downplay these things. um, Here's Nat Gas. Big, huge move today. This is 25%. But this is how Nat Gas moves, guys. Right? Nat Gas moves crazy. Now, look at where it found some support. And look at what it did. Up until today, Nat Gas futures were one of the weakest commodities over the last couple of weeks. Remember, this was just at the beginning of December. This was at 5.27. We went all the way down to 3. So I'm sorry to say, but this is just a bounce in nat gas. And I get it. It's because of the cold weather, right? And I think I'm not a specialist here in trading this commodity, but I think once you hear about cold weather, you probably want to be locking gains to some extent. It's kind of like the news, right? Buy the rumor, sell the news, right? You hear a lot of big storms coming that might be coming or brewing. You could buy nat gas. Um, and then once it pops like this, you probably want to be taking some profits. All right, let's just go. Do I want to go through any other sectors, or some names? I liked, again. This was what was kind of tough about today. INOQ looked like it was going to, once again, intraday. These things looked really good. INOQ got all the way up to $54. This is why I take targets in some trades right when from the start. I always try to get one target in, if I'm especially if I'm establishing a swing trade in the first half of the day. Right. So this is kind of a little bit of trader education. So let me say this again. If you're establishing a swing trade in the first half of the day, we have no idea what that candle is going to look like at the end of the day. You could see fake outs. You could see names being very strong and finish strong. But we don't have all the information, and hence in the middle of the day, I take, when something is up 3, 4, 5, 6%, I take a target, which is what I did in INOQ. Now, I would still be watching this group. It's still very coiled up here. It's just on a day where the Qs went down, and again, you could kind of think of it like this too. The Qs were down 2.1% today, and INOQ was just barely down on the day. So it really wanted to rally today, but the overall market kind of kept it down. Now, keep in mind, I want to talk about this for just a quick second. What happens when names are in ETFs, unfortunately, is they get pushed and pulled around. Look at what's happening with SanDisk. Right? SanDisk was up 9.5%. Do you know why it didn't succumb to the selling pressure for today? Right? Here's the Qs. And all of a sudden at 11:30, we turned and went lower. Right? SanDisk didn't do that. It was 11:30, no selling pressure. Why? Because it's not in any ETFs. Right? This got spun off last year, and they haven't added it. Right? We haven't heard about SNDK being added to the Qs, right, or added to XLK, or added to the S. It's not even in any of the SMA, in any of the semi ETFs. Right? So it's too new. They haven't added it yet. Now maybe they will do that shortly, but hence that's why. So look at this. Look at the difference between this and Micron today. Couldn't hold the gains, and I think that's because it's in. Here's the semiconductor ETF, right? This also spilled lower, right? So that's going to affect Micron. SMH, Micron's in SMH. So this selling that you're seeing is going to affect all the individual names of the components. So again, this is just, this is what I used to do, when I was an institutional trader. For example, and this is the last trading education, and then we'll move away from this. But let's make sure. Okay, sorry. So just replace this. So if somebody gave me a big order, if a hedge fund or institution said, "Hey, we want to sell 2 million shares of SMH, the semi ETF," what would I trade? Right? If I was facilitating that order for a hedge fund, if they said, "Hey, I need a bid for 2 million shares," right, and I have to give them a price, right, and then folks don't understand what dark pools are because they call everything a dark pool, but some of it is just they're big trades, right? They're block trades. So what I would do is, maybe I would quote, if a hedge fund came to me and said, "Hey, I need to sell 2 million shares. What's your price?" Right? Meaning, they want a price for a block trade, 2 million shares. right? And I give them a price, probably a little bit away from the screens so I can hedge it appropriately. And they would say, done, sell 2 million shares of SMH for me. So that means on my books, I'm now long 2 million shares of SMH, and I need to get rid of that. I need to start selling in the market. What do I do? Right? Well, why would I just sell the SMH ETF? I would be selling the underlying basket, right? Because that's where the liquidity is in any ETF. It's the underlying basket. So I would probably be trading selling both the SMH ETF and the underlying components, right? So that's how a market maker facilitates large order flow. Hence, all these names start going down because there's selling going on in the ETF. So you go and you look at some of the components and you're like, yeah, well, that's probably why Micron couldn't rally today. All right, guys, that is it for today's video. So overall, my stance for today is I like how some names behave today. We'll just kind of have to watch to see how support is defended. I always get questions on Twitter about, hey, what do you think is going to happen here? Honestly, I don't know. You kind of just we don't know if there's going to be more selling tomorrow or if there's going to be buy the dip. My guess is that you're going to see, if I had to guess for tomorrow, I would say that this is a good buy the dip opportunity into some support. Now, I don't know if we're going to get the same thing as we saw last time. Maybe it's a couple days and then we get rejected, right? That's a possible outcome. But again, I think the main cause of this today was markets were heavily overbought, and we have earnings season and a couple other factors going on. I'll leave it there, guys. Have a great night. See you tomorrow.